Hello, traders, and hello, Sensei Trend traders. Hello, team. How are we doing today? Well, let's get right into it. Today was a fantastic day trading for me. I'm sitting up $808.22. Welcome to Trading Trail. The day is January 14th. It's the eighth day of the market here in 2025, and let's get right into it. So, starting out, I sat down somewhere around 6:45, 6:30 area, and I was watching for something to set up into 7 in the morning, just like Sensei does. Now, at this time in the market, this early in the market, I want to go through what the top gainer list is looking at like. So this is going to be a pretty good lesson, especially for any new members that are kind of joining us and for the trading trail, which is going to be, again, my series going over all of my trades for the year 2025. That's the goal. And if you guys have any comments, anything that you want me to cover, please throw that in the comments. Let's get right into it. So at this point in the morning, now I created this note at 6:44 in the morning just to add in this one screenshot right here. Now the reason I did that is because I wanted to go over this for some new members here. Now I'm going to pull out my little highlighter here, and we're going to go through and systematically get rid of some of these stocks on the top gainers list. So what Sensei and I focus on are going to be low float stocks with increasing volume. That's our sweet spot. If you look at free float, so right here we have our top gainer list, and we have it sorted by percent change. So percent change is going to be always at the top. So higher the number, the better, basically. That means it's moved more. Now, we want that added volatility if we're looking for a day trade. Then we also have the price that it's being traded at right here. Now, more importantly, though, we have free float, and then we also have volume. If you guys have heard of the ratio between supply and demand, you need high demand and low supply to increase to change any price. Now, if we look at free float and volume, ask yourself really quick: free float, what is free float, and what is volume? Which one is supply and which one is demand? So think about that just for a second, really quick. Which one's going to be supply and which one's going to be demand? So let's get right into it. Free float is more or less the supply of the stock. The free float is the number of shares available for the public to trade. Volume is going to be the demand. The more people buying and selling, which is volume, that means it's going to have more demand. The lower the free float means that there's less supply. When there's less supply and high demand, what's going to happen to price? Price is going to go up. So that's why we filter everything by low float stocks. So right here, looking at the setup on the day, we're going to go through and systematically cross off all of the stocks on this top gainer list that don't fit our criteria. And this is a really good example, okay? So right here, NMHI, low float, decent volume this early in the morning. We love to see it. Now, if we go to HES, that's too high of a float, 32 million. Our sweet spot is 10 million or less. STAF, decent. ADD, micro float, pretty good. PII, 126 million float, not trading it. 167, not trading it. No volume, not trading it, not trading it, not trading it. No thank you, no thank you, no thank you, no thank you, no thank you. Let's go down. No thank you, 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 no thank you. The reason I'm crossing all of these out is because this early in the morning, and they've only traded between two, sometimes one share, and maybe a few thousand shares. That's it. Compared to the stocks that have already gone through, right here, 7.82 million. Right here, 21 million. That's enough volume for us to trade. Anything less than that, you're looking at something that's going to be much more unfavorable. So right here at 6 in the morning, you can systematically go through this entire top gainer list, and just by focusing on these two aspects, free float and volume, we narrowed down our focus to 3 different stocks: NMHI, STAF, and ADD. Now, let's go ahead and take a look at what I decided to trade first thing in the morning. The likelihood that it's in MHI, STAF, or ADD is very likely. Very likely. Just because everything else doesn't have something crucial or doesn't have the fundamentals for me to trade it. It's setting all of these other stocks are setting up on low volume, non-existent, and high float. No, thank you. We will not trade those. Okay. If you're looking for a very likely setup, you don't want to be trading large floats or stocks that are setting up on the low volume. So right here, we narrowed down focus to 3 stocks this early in the morning. So it's a slow start to the day because we have to be patient enough to wait for those 3 stocks to set up. If you don't wait for any of these 3 stocks to set up and you're forcing trades on any of these, you will lose money. I've done it before. I mean, I can tell you that. I can tell you that for sure. So first trade of the day is going to be on ADD. This is the first one that I sat down and decided to trade. Now, I sat down, but I normally sit down between 6:15 and 6:30, and I start watching the market and seeing how stuff develops between 6:30 into 7 in the morning. 7 in the morning is a big opportunity for bulls to step in. Now, let's take a look at why we traded ADD. One of the reasons that we decided to trade ADD is because we saw this price action. Now, I want you guys to focus on every single area that I have circled in black. Let's zoom in here if we can. So if we notice here that in order to have a nice downtrend, we have a peak, a valley, and then another peak. And this is going to form a series of consecutive lower highs. This is the high. This is a lower high. You see how it's lower than price action? This is going to be the lower high. Another lower high. Another lower high. Now we use all of these to draw in a really nice downtrend. What Sensei says and preaches for good reason is you need a break and hold of a downtrend to shift from a downtrend into ideally an uptrend. If you're not in a downtrend, you want to be in an uptrend. Now you can move sideways, okay? And you normally move sideways when there's not more volume stepping in. So again, that's why we keep focus on the ones that are already getting the attention. These are the hot girls in the bar. We don't want to talk to the ugly girls in the bar. These are the ugly girls in the bar. I hate using that analogy because it feels wrong, but it works. These are the ones that are going to be getting the attention. Those are the ones that are going to be getting the phone numbers at the bar. So let's scroll down and decide why we decided to look at this 238 break. 238 was picked because of this action and this action right here. Actually, now that I think about it, we need to draw a circle around that area too. So we found the 238 break, and we're expecting if a candle is able to close above 238, that should initiate that stronger move up to our next resistance. Oh, let's get the highlighter out. Excuse me. That should initiate our move to the next resistance. A break of one resistance shows room to the next. The next resistance from the 238 is this area, 256. Break of 256, which happens right here, shows room to the next resistance. Strong break of this shows room to the next. And that's going to be 3. We get the move to 301. If that's not perfect, I don't know what is. Now, ways to look for entries in this one, okay? I truly believe that having focus on this downtrend, I was buying as it was bouncing off of the support of the downtrend. So we got the break right here, and then I saw price start to move down, come back down, and test the downtrend right here. Then I knew as long as this area, the area in red, held, you can buy anywhere within this green highlighter for that breakthrough 238. Now I know Sensei says to wait for the break, the confirmed break, which is the candle closing above. That's a really good system, in my opinion, to kind of figure out if that trade was going to work in the first place. Because like if price moved up to this 238, broke 238 by closing at 239 or higher, and then slammed back down, we should have been looking at a different setup sometimes, because we know that 238 is that key level. Now, sometimes you get that key level wrong and the trade goes south, okay? But it's a really good system to figure out if you had a winning trade or a losing trade. Now, it's also possible to lose money on a winning trade, which doesn't make sense, but it's very possible, depending on your execution of the trade. You can hold the trade for as long as possible for it to become a losing trade. So, to say that again, even if you got in right here, but you didn't take profits within any of this area right here, and you held for price to come all the way down, you can hold anything until it becomes a loser. So it's a really good system to realize that it was a winning trade, but you weren't able to walk away with profit. Now, let's go into my, let's kind of drill down here into my execution. So right here, I'm buying, and I also buy on this candle right here. This B just means that there was a buy order that went through on this 1 minute candle. So I was buying as it was breaking this 238. So I had a starter position down here, and then I added to my position as it's breaking 238. Now, at the same time, as long as the 10 EMA or the support of the downtrend holds, either one of them holds, we should get that move higher. These are my mental stop loss, this little corner right here. Now, right from this 238 break, I'm scaling out up here. As price is coming up into this next known resistance, I'm scaling out of my position. Taking profit into a known resistance can always be a good idea. So I take off about 75% of my position up here. Then I know consciously that if the 10 EMA on the 1 holds, the strongest look is still underway. So right here, my average is around the 235, okay? And price is coming back down to test the 10 on the 1. A fail of the 10 on the 1 is going to simply show room for the 235 area. And I know this because VWAP's right here, the 25 on the 1 is right here, but more importantly, the 10 EMA on the 5 is below my average still. So if price wants to fail the 10-1 here, and my average is still above the 10-5, in order for price to come down and test the 10 EMA on the 5, in order for price to come down and test the 10 EMA on the 5, it's going to go below my average, if my average is the 235. Do I want to hold through that? Me personally, no. I kept it very tight, and I'm very, very proud of my execution on this one because I closed my position up here at the 10 on the 1 fail. So I didn't have any second of drawdown on this first trade from 235. Now, you're asking yourself, in the moment, if it goes back up, Sensei's max target might have been like $3 on this one, right? Because that's what we were looking for. We were looking for this larger move that happened right here. It didn't happen exactly right here. So knowing this, knowing that if it held the 10 on the 5, it can still show strength, but I didn't want to hold through the weakness as it was testing the 10-5. So that was why I willingly closed my position right here. Now, in hindsight, of course, you can hold through this dip as long as it holds the 10-5. You've taken enough profit off the table that even if you have to close your position down here, it should still be a winning trade because you scaled out so much, which is exactly what I did. I actually closed the position right there. Now, in order for me to, I was also aware that if we got the break of the 256, we were going to show room much higher. So I decided to play it again. Now, I played it again with much smaller size, okay? Because we had this 256 found from right here, this resistance, and this resistance. So if I was willing to play the 256, I knew that we needed a new downtrend break. So again, we have the peak. The peak is right here. The valley, and then another peak, which, again, a series of lower highs creates a downtrend. So I drew in this new downtrend. This new downtrend allowed me to find a new entry right here in this green highlighter. Let's zoom in. This green highlighter, I'm going in with smaller size because price is so far extended from the 10.5. If I went in with a little bit larger size, I truly believe that would have been an irresponsible trade. The idea of taking shares right here is for that larger move up to 271 and 3. This is aggressive. If you're a more conservative trader, I don't want people doing this. Don't this is a pretty aggressive trade right here for the breakthrough 256. Now, at the same time, if you're able to keep it tight like I would have been able to, I think it's a great trade because I'm going to be cutting the trade very quickly if the support of the downtrend fails or the 10 on the 1 fails. Either of these areas are the areas that you want to focus on. Scaling out up here, closing the position. I think I sold 50% right here because the 10 EMA on the 5 was kind of close to my average. So I was thinking if we get the break and hold of 271 or the break and hold of 256, I should be closing right here. So I scaled out almost 80% of my position up here. And then I left a little bit. I call it lotto shares when you're down to like a tenth of your position. I'm down to lotto shares down here. And then I close the position right here. Okay, so making a little bit of a loss on lotto shares, but it's small enough size and I did enough scaling out. That is a phenomenal trade. Phenomenal trade. Now, I think so far in the morning, I'm sitting up actually like, I think it was like $200 just on playing ADD once. Um, actually, I think it was a little bit more than that now that I think about it. But we can go ahead and move on to the next one. So right when ADD is starting to fail out, the next one that's starting to set up is NMHI. So let's go into this one. Again, we look for a break and hold of a downtrend. Now, in this area, Sensei actually did not alert a 284. I decided to play it either way, but I played it with smaller size because Sensei was a little bit more cautious on the setup and he didn't want to play this 284. So I decided to kind of sit on my hands a little bit. I did want to trade it just because I knew if I went in with a smaller size right here, I would be able to go in with larger size up here, especially when it's extended so far much from support areas. The support areas are our EMAs. So we have the 10 EMA, the 25, and then the 50 EMA, all on the 1 minute. When price is so far extended, your closest support levels are price is kind of extending from support. So sometimes, if you're extending from those EMAs, you have to kind of pretend like you're trading on a glass floor and it can shatter beneath you. Because if you're taking a trade up here and the 10 EMA is, below like $2, it's so far extended, that is an irresponsible trade. Irresponsible trade. So I take a small starter position down here because we had the break of the downtrend, and I knew that if we were able to hold this area right here, the setup that would show later on would be even better. We actually hold above 284, which is the best look. We get a break above 284 and a hold above 284, which shows room for that larger action. So my starter right here allowed me to go back in on this candle right here. So now I have full size. I'm adding full size right here. But since I had this starter down here, my average is actually right about here. I think I had a $3 average actually on the dot on this one. So by adding up here, my $3 average, I can take more profit off the table up at 3.4 and let that sucker ride. So again, my first profit take was actually right here when we got this first initial extension from the 10 EMA on the 1. I add back right here, 10 EMA on the 1 continues to hold. We get another extension. And then, again, as it's extending away from that 10 EMA on the 1, taking some profit off the table. These red highlighted zones are me taking profit. The X marks the spot is me closing the position. I close the position on the 10 EMA on the 1. Even by adding right here. So like if you think about it, I add right here and then I close the position right here. That's a break-even trade. Not necessarily because I still had a starter in. Half a size on a starter. So my average was still at $3. I'm still making money. Now at the same time, from this entry at like, I think I entered at like 312 or something like that. If I enter at 312 here and I'm scaling out half my position up here, all of these are profitable areas to be taking profit. So because I'm able to add to my position and have a starter, as long as my average is below my mental stop loss, because my mental stop loss is this 10 EMA on the 1. As long as my average is below the 10 EMA on the 1, you should be able to walk away with profit on that trade no matter what. Yeah, so 287 average on first starter, 312 average on the next one. So very nice trades in MHI. Let's move on. OST, this one I'm kind of actually upset at myself. So I'm going to be very honest with you guys. I was sitting up unrealized gain of almost $350. Now, I don't know if it was the action or me fumbling with my trading keys, but I had a lot of orders not get processed. So I might actually add a little bit of an offset on my sell orders. I only trade with a 1 cent offset, a 1 cent offset, but maybe this is going to change because of this trade. So let's go into why we were looking at this trade. Sensei, I think, was alerting a 338 area. I had 338 charted from a previous time playing it, so I didn't want to remove it yet. But I think we really played like a 330, what is that, 331? Something. We played this area. Now, nonetheless, we grabbed this area because of this action right here. Again, we're going to kind of circle all of the areas that we want to look at with our black pen. So we're looking at the area, and we know that if we get a candle close above this area, we should show room to the next, which is this area. And that's exactly what happens. As a matter of fact, we get an extension nicely above, and we actually get a wick all the way up to 422, which we knew is going to be that larger resistance. These blue lines are resistances times up. Excuse me, I've traded it from last year, 2024. So blue lines are from 2024. These oranger lines, just like Sensei's, are from 2025. Now, all of my entries, all of these green areas were my entries on this. Sensei alerts 331. Sensei also alerted 369 because of this area and this area. Now, break of either of these areas show room to the next. So phenomenal trades, textbook matter of fact. This entry from down here, me adding at the next known resistance, I had 2 sell orders go through, but they weren't at enough size. Normally, on that first profit-taking move, Sensei recommends to take 50% of your position off the table. That's what I tried to do. I had an order placed somewhere up here at like $4 and like, I think it was 19 cents or something like that, if I remember correctly. I don't know, it was 12 hours ago, but I had an order placed at 419 on this wick. I tried to snag it. My order only got filled by about 20 shares. I had a whole lot more than 20 shares. So in that moment, I need to not be greedy because I was like, you know what? If it holds in this area and gets back up to my order, I'm making an extra $100. But even in this area, I was unrealized gain of about $350. If I actually followed Sensei's rules and scaled out of my position properly, this is an entire profit-taking move. You want to be taking profit, at least something off the table right there. The rest of the shares you can leave for the 10 EMA on the 1 to follow. Now, because I only took, I think I was like right here, I only took off like maybe minus 25% of my position. Because I didn't do enough trimming, that when price started to come back down to my averages, black line is my average position after both those orders went through, by the way. So after that, and I get caught in this flush, that is about to become a losing trade. I sold 25% of my position for about $100 in the green, realized profit, and then I'm closing my position at about $100 realized loss. So overall, OST, plenty of opportunity. Like this was a really nice, like I think it was like 18% like trade or something like that. Like truly phenomenal, Like this should be enough breathing room in that trade to walk away with profit. Unfortunately, I got greedy, left an order on the table that never got filled and didn't trim enough, and I gave away, $350 of gains. Pretty unfortunate. This is definitely a learning opportunity, especially when my order does not get filled, like it did not get filled up at 419. So I think OST, let's see. I think OST, I'm sitting red on the day, actually. Yeah, I lost money on that one. On a trade that I could have made $350. God, that's brutal. God, that's brutal. This is just, goes to reinstate the fact that you really need to do everything in your power to follow the rules. One of my rules is take some profit off the table at that first profit taking move. I didn't take enough profit off the table up here. And that's why I'm walking away red on it. I mean, that's just the reason. So OST, pretty phenomenal. Phenomenal trades. I'm sorry if anyone else lost money or got caught in this flush, but the trades from 338 and 369, phenomenal. I mean, they're just textbook. Not a lot of room to take profit. And maybe you only played the 331 and not the 369. Even more room to take profit off the table. Phenomenal trades. I really wish I was green on this. Moving on. Next one that we were looking at, this one was setting up into 8 in the morning. We have the 8 a.m. glitch candles somewhere right here. So keep in mind of those. AIFF, pretty amazing. This is another textbook one. Now, normally I don't like drawing downtrends like this right here. I truly don't like it. Because in order to have a really good downtrend, I'm going to try and draw it on the side here. In order to have a good downtrend, this is going to be price. You need price to have a peak, a valley, and then another peak, just like that. Then a break of the downtrend, and then a move higher. So this forms a really nice downtrend. And we're going to draw the downtrend, or try to. Oh, it's going to be difficult. All right, nothing lines up exactly right, but this is a good idea. So right here, we have the peak, the valley, and then the peak, and then break. We're going to do the break of the downtrend in red here. And then we're going to have the holding support. Then we're going to have a profit-taking area, just like that. That's ideally what you want to see. That looks a little bit better to me. There we go. That's ideally what you want to see for a nice kind of downtrend to form, because you have the one peak, the second valley, and then the second peak. This forms a consecutive series of, again, I was mentioning this earlier, of the high, then the lower high. You need to see this type of price action in order to see that move higher. Because anywhere in this area, highlighted in yellow, if it's below a downtrend, what kind of trend do you think it would be in? It would be a downtrend. All of this is the downtrend area. All of that is the downtrend area. If you're trading below a downtrend, most often, you would have to expect that you're in a downtrend. Now, I will give you a quick little asterisk attached to everything that I just said. There is one trade that I genuinely look for, and I love the strategy behind it. Sensei's 10 EMA on the 5 snapback strategy. Most often, his snapback strategy, I'm going to add a pen here, and we're going to make it really fancy. We're going to do a brush pen. We're going to do let's do a gold. No, let's do a wood grain. All right, we're going to make it massive. There we go. All right. So most often, Sensei's 10 EMA on the 5 snapback strategy. Imagine that this is the 10 EMA on the 5. Price finds support right here, continues on higher. Now, what is so unique about Sensei's 10 EMA on the 5 snapback is most often you're trying to snag shares right here before the downtrend break, which often gives us a little bit better risk to reward. Because if you're snagging shares right here and you're going to cut your loss if the 10 EMA on the 5 fails, this action right here is only like minus like 2 to 3% most often from what I've seen. Don't quote me on that. Study it for yourself. But again, this is why studying is so impactful because we see moves like this all the time. So make sure you write them down and study and learn from them. Most often, a 10 EMA on the 5 snapback gives us a better entry with lower risk compared to buying up here at the downtrend break or for the break of this high, of this lower high, for the move back up to the high and then a move eventually higher if it shows room for it. So I went over a lot right there, but let's get right back into AIFF and kind of focus in on why we look for the break and hold of the downtrend. So let's look at this right here. This 312 kind of lined up with Sensei snapback strategy. So my first entry was down here at the break of the downtrend. Now again, this isn't the best downtrend because it's just a peak and then a valley. But if it lines up with Sensei snapback strategy, I will trade it every day of the week. This lined up with Sensei snapback strategy. 10 EMA on the 5 is right here. Okay, that's a nice little risk to reward ratio right there. I'm only risking a few percent because I will simply cut if the downtrend fails or the 10-1 fails or this lower high is taken out. Technically, you can wait and see if price finds support on the 10 EMA and the 5, but it's already found support, so you are trying to catch the next move off of the support. And that's exactly what this entry does. I enter on this candle right here, and then I'm also taking a little bit of profit off the table right here. There was a little bit of profit taken right there into the next known resistance. And then what I end up doing right after that is as I see that price is holding on the 10 EMA on the 1, I add back to my position, back to full size, which is risky. It's aggressive. Don't get me wrong. This is not for everyone because I traded very aggressive on this one because I knew that the 367 break would show room back up to the 4 area. And then guess what? We get the break of this resistance found from, let's circle this area right here, top of this green candle right here is 3.67, and that's where we draw our line. And break of this area was the 3.3, so that's where we draw our area. And then continuing on, we get the break of 367, shows room to the next resistance, a psychological 4, and boom, this is a perfect trade. Very perfect trade. So from this next entry at 367, I do plenty of trimming. I follow my rules and I trim into this next known resistance. Most of my sell orders trying to get them as close to that 4 level as possible. Now, what we look for is a break and hold of the downtrend. What's price doing right here? If price holds above this downtrend, is it not holding above the downtrend? So I want to hold the rest of my shares. Normally, I'd probably be cutting. If my average is 367, most often I'm probably cutting if the 10 EMA on the 1 is failing because that's only EMA above my average. Now, in this case, I've already taken enough off the table. So no matter what, even if I held the remaining shares, like, minus something percent, I knew that if the support of the downtrend were able to hold, then we should see an extension higher. It's not a guarantee, but that's what we look for, right? Let's scroll down. AIFF, just a few minutes later. The support of the downtrend holds perfectly into that extension higher. I mean, it's near picture perfect. This is a great one to study. So if you haven't screenshotted this one, screenshot it now, for God's sake, and save it in your own folder. But what we look for, break, hold, and the extension higher. So the support of the downtrend held perfectly. I mean, this wick right here came down near perfectly a cent away from our downtrend. I wasn't even stressed. Now, I do have a phenomenal average right here. But from taking profit off the table, everything, I wasn't even stressed because I knew that I understood the trade, more importantly, and I knew that if the support of the downtrend held, we should get that move higher. That's what we do. So phenomenal trade on AIFF. Sorry, getting a little tongue tied. But phenomenal trade on AIFF. This is a textbook move that I would really recommend many people to study, because even from this little pullback right here, you know, what's that look like? Another downtrend, a series of lower highs. Break the downtrend, move higher. It's not a guarantee that you're going to get the move higher. You really need to see the support of the downtrend hold. But we get the four break and hold, and then it extend higher. And from here, I knew that as long as the 10 EMA on the one would hold, I will just keep the rest of my shares on the table. I've already locked in enough profit from this trade that I can leave the rest of my position in God's hands as long as the 10 EMA on the one holds. So I end up closing my position. I think it was like maybe I'll show it later. I don't remember, but I think I end up closing my position up here somewhere where the 10 EMA on the one ends up failing. Now, after this, like kind of the sweet spot between like 8:45 and 9:30, I really like to take my hands off the keyboard. I think that's normally the safest for a lot of people because when you start trying to force trades as they are developing and setting up into market open, you can just get wicked out randomly. That's what's happened to me in the past, at least. Maybe Sensei has a different take on that, but the sweet spot between 9 and 9:30 kind of seems to slow down as things are just developing and setting up they're putting on their makeup for 9:30 market open. Now, let's get into market open. This was pretty phenomenal. I mean, we had two banger amazing trades. Amazing trades. So, first, let's continue on AIFF. This is the one that I was just talking about. So, we get the break and hold of the downtrend right here. I do some trimming off the table right here, and then I'm holding the rest of my shares as long as it's holding the 10 EMA on the one. Notice how it's holding a key level right here, and then the 10 EMA on the one is continuing to hold. Near picture perfect if you just held your shares for the 10 EMA on the one and take profit off the table into known resistances and 10 EMA on the one extensions. I mean, this is beautiful, beautiful action right here. On this one stock, I'm able to lock in over $602 worth of profit on that one stock. At least, let's see. Okay. 572 on the day. I guess I left a little bit on the table. But at this point of the day, just by letting profits ride on the 10 EMA on the one, I'm up unrealized $602. Pretty fantastic trade, if you ask me, just by keeping focus on the 10 EMA on the one. Now, in order to kind of let those shares ride, you want to make sure that you do some trimming first, but that's exactly what happened on AIFF, and I'm very happy for it. Now let's get into another one that Sensei alerted, NMHI. Now, if you're a newer trader and not familiar with Sensei's Discord, let's do a quick little rundown, if that's all right. So this is Sensei's Discord, and he alerts many different banger alerts. And at market open at 9:24, we decided to play NMHI at 285. This guy's been trading for 8+ years at this point, and has I think last year he had 1,600 winning alerts. Quite a phenomenal trader, if you ask me, and I have learned a lot. So, Sensei, if you're watching, thank you so much. It's been an honor learning under you. Now, he had focus on NMHI at 285 and a 3.3. Let's go over to my chart now. So, let's get right into this. NMHI 285. I was focusing on. Wait, he said 285. Yeah. So he was alerting a 285 break. The reason that he had such high focus on this is because let's go ahead and pull out our black marker and circle these key areas. And you tell me why we had focus on it. Because we get let's pull out the green marker here, get a break and hold of the downtrend, which shows room for the larger move. That is the big thing that we want to pay attention to here. Now, the 285 is found from this, and this resistance. More importantly, I think it was this resistance right here. These areas are which give us conviction that a break of 285 is going to show room to the higher move. We also get a break of 285 at market open, break and hold, matter of fact. And then, right from this pullback, I decided to add in a new downtrend. I was thinking if price gets above and holds above, we should see that larger move. So let's scroll down here. NMHI. Well, would you look at that? Breaks it, skyrockets to that next area, then comes back down, holds above. I think it made a move somewhere in this area and then kind of slammed it back down. But let's go into some of my entries and exits. All of these green areas are areas that I would consider buy areas. The red areas are profit-taking areas or scaling out areas. 10 on the 1 failed. Perfectly reasonable to kind of take some shares off the table here. Right here, we get another break of the downtrend, and I'm scaling out right here, and as it's failing the 10 EMA on the 1, right here, I close the rest of my position. A fail of the 10-1 is the first sign of weakness on that trade. Now, all of these circles here are going to be key areas to look at to draw a downtrend. In order to draw this downtrend right here, you needed to see this pullback that happened shortly after market open. And I quickly drew that one because I knew that if we get that 3.3 break, which I wish I could scroll back, like 3.3 break was the key pre-market high, which we want to keep focus on. A break of the pre-market high can often be one of my favorite trades to kind of look for. Now, at the same time, why on the larger picture do we have focus, on AIFF and NMHI at this time in the morning? Because they're the stocks that are showing the best room to run. That's why it's so important to look at these longer time frames. How did we have these resistances placed beforehand? It's because of this area, this area, this area, and this area. So just from pulling up a 4-hour chart here, because that's what we're on a 4-hour chart on NMHI, I was able to plot out a 375 resistance, a 434, 445, 416. The blue lines, again, are from me playing it previously back in 2024. 285 is actually grabbed from this area. So if we get a break of 285 here, shows room to the next resistance, which is 375. If we go down to the 1 minute here, this candle wicked all the way up to 367. If that's not close enough to your 375, you got to reset your expectations. This is a beautiful move. Getting that move all the way up to 375, that's a miracle. That's a miracle. I would consider that testing that 375 resistance. Let's go on to AIFF. Again, I was holding this one into market open because we get the break of the downtrend, holding key level, holding the 10 on the 1, scaling out all of these red areas, scaling out into a known resistance, scaling out as it extends from the 10-1, scaling out again as it extends from the 10-1. Then again, my average is like somewhere down here. Okay, so the 10 EMA on the 5 is above my average, the 25 on the 1 is above my average, the 10 EMA on the 1, all above my average. So in my eyes, if I have such a good entry, and the support levels are so far above my average, I can just sell 50% of my position when it fails the 10-1 and probably close my position if it closes or fails below the 10 EMA on the 5. Again, we are on a 1 minute chart, but the 50 EMA on the 1 minute lines up closely with our 10 EMA on the 5. That's why I closed my position right here, because that basically means the 10 EMA on the 5 is very close by. Now, let's go over to AIFF and go over why we had such higher focus on those longer time frames. Every single circle here, I'm trying to bring attention to for a specific reason. Sensei filters through all of this and kind of gives us some of these key areas that he pays attention to in Sensei Speaks. So if you don't pay attention to Sensei Speaks, everything he says in there, he says with a purpose. He mentioned 624. Matter of fact, he changed his max target on AIFF to 624, I think. Now we also have these key levels as well. So these wicks kind of represent that 525 resistance. This area right here represents that I don't know, there's something covering it, but a 447 area resistance. Then we also have bigger area for the 7.7. Now, if theoretically we got that break of 624, that would show room to the 7.7. That much room to run is why we're taking this trade in the first place. It's not a guarantee that it's going to get that large extension all the way up to 7.7. By any means, you don't want to get caught holding and hoping for that move to 7.7. But it's showing the larger room to run, so we want to keep focus on it down here. I don't think it ever got above. Oh my. Here we go. I don't think it ever got above this. Sure. I don't think it ever got above this 5.8 resistance right here. But if we were able to get a consolidate somewhere in this area and then set up for that 624 break, the next known resistance above is our 7.7 basically. Now that's a pretty fantastic move, right? For it to go from 1.8 all the way down here. It was at 1.8 like 2 days ago, right? For it to go from 1.8 to a 7.7, that's very unrealistic to expect it to do that, but it's showing room to run. And we identify that by looking at this longer time frame. That is a 4-hour chart, a daily chart, whatever that might be. Just pull it up. Just pull it up, please. You'll learn a lot. Now, so far, I've made a handful of different trades, and I think I'm finishing the day up, realized $808.22. Most of that coming from AIFF, ADD, then nice little scalps on NMHI. Small little loss on OST, SNGX. I didn't go over that one today, but if you guys are interested, I can go over it later. Please drop a like, comment. You know the deal. Thank you guys for tuning in to Trading Trail. And I'm looking forward to tomorrow. Tomorrow's going to be January 15th, the 9th day of the stock market. And I am very much looking forward to it. Now, keep in mind, I think we are going to have the CPI report coming out tomorrow, which is one of the economic factors that the Fed, Jerome Powell, the Federal Reserve, it's one of those pieces of paper that they look at when determining interest rates. Now, I don't expect the CPI report to make or break a Fed decision coming in sometime next month, but you never know. So it could mean that we need to stay very cautious for our approach tomorrow. So let's stay safe, keep trading, and learn a lot. Learn a lot. We got to keep studying to learn a lot. That's the spirit, team. That is the spirit. One other thing that I did want to mention is for those of you that are in Sensei Trend Traders, there is a brand new execution lab. And I'm going to do my best to start sharing my own PDFs of my notes in here. Now, at the same time, if there's a trade that you guys would like me to cover and kind of put my own analysis or 2 cents into, please feel free to tag me on Discord with that. That would not be a problem. And if you guys want me to cover it live, just let me know. One other thing, if you guys have any questions about how I take notes, it might be worth it for me to maybe do a video just solely on how I take notes, use OneNote, and kind of my experience drawing and taking notes within the past year. If you guys want me to do a quick little overview on the tools that I use to trade, just feel free to leave a comment and let me know if that's going to be useful to you guys. Thank you guys for tuning in to Trading Trail number 8. And if you have any constructive criticism, questions, comments, concerns, drop them below. Thank you guys so much. Have a good day. Stay safe trading, y'all.